Good morning. Today is Monday, November 24th, and I just got back from a week in Mexico with it's a typical yearly vacation that I take with some close friends, and we've been taking this trip for about 18, 19 years, and it's really good to recharge my battery here and then get back into the swing of things. So it looks like we missed some excitement last week. I did not trade. It's the first time I did not trade for an entire week in probably 25 years, and it was actually quite refreshing. So let's see. Hey, good morning. Good morning. What do we got here? All countless. All counties, excuse me, I can't see this early in the morning. And Calf Train, good morning, good morning. All right, let's get right into it here. So we should be getting some of our economic data starting to come back alive here. We have nothing happening today, which is good. Tomorrow you have core PPI. Let's see, month over month, retail sales, month over month. So the numbers should start popping out here right now. So that should be pretty good for us. So we can start getting some data, and then there can be some balance back into the market here. Chris, I apologize, buddy. Good morning. Let's see what else we have here. Tomorrow, pending home sales. Could do a little something. Don't see much there. Consumer confidence coming on Wednesday. GDP preliminary. So you got some good stuff coming out here before we have Thanksgiving coming into play. We do have a shortened week, so be prepared for that. So let's get right into the broader markets. So we had some interesting things. I was following up on things while I was out of town, and it looked like we had some good earnings report on Nvidia, and that the market was responding well, and then it just took a nice little nosedive in the afternoon. Let's see, where's Friday? Probably right in here. It looked like, I'm trying to see if it was pre-market, and then this was, let's see here. Span this. Okay, so Thursday. So I think it was Wednesday we had, after the close, you had some pop, and then this is what we had on Thursday. I haven't done any levels here too, so these levels were intact here before I left. So it's pretty interesting how it responded, and we had some good resistance up here, and then we pulled back here. I do like this level right here at 68.56.63. I do believe that may be October low, so it could be pretty important that we hold that. So let's go back and see where we're at here. This right here, yeah, see, so we had this nasty sell-off in October, and this is where it is. This is where it held up, October 10th. And as you can see on Friday, it held that level right there. So that seems to be responding pretty well there at 65.46.63. It looks pretty nice there, and that it responded on Friday. So we have that level. We want to hold that level, because if we don't hold that level there, we are going to see some downside, which is not, it's not unreasonable to see some kind of downside there. So if we lose at 65.46.63 level, you're going to see we're probably going to get down here and fill the 64.32.97 level pretty quickly before we move higher. I still like the markets overall. I think that there's a lot of things that are happening that have brought the markets down, and I think a lot of it has to do with crypto, believe it or not. I think I was reading and I was listening over the weekend. There had something to do with some glitch that was happening with Bitcoin, where all the capital, the reserves that these big funds have, when the market starts selling off, they have to preserve their capital. So in order to preserve their capital, the market makers have to continue to sell, which continues to push the markets down. So they hate to use the word glitch, but there's no other word for it. So I think it's a glitch in the market that was pushing crypto down. And I think over the last several months, crypto has been leading the market. So, but if you go back and you look over the last several years, it's not the first time that you have these nasty pullbacks of crypto. It's not for the faint at heart, but they are expecting crypto to get back up there, or at least Bitcoin to be pushing into 130s again, probably within the next month or two. I don't think that we shoot back up there right away, but right now it's good to see that you got a little response right now. So what happens is when you get this big sell-off like this, it creates a big speed zone. So if we can get above, I would say this on the ES today. I like the longs if we hold this 66.55.50, and if we can get above this 66.90.75, I think we could quickly test this regressional trend line that I have up in here at 67.39. But in order for us to really push and start to get through and get those new highs, we're going to have to bust through this level up here at 67.72. And then, of course, we're going to have to get through that previous all-time high at 68.12 in order to keep popping through and getting through the upside on the ES right now. But I would not be surprised if we chop away right now and we stay right in here for the next couple of weeks, or at least for the next week or so until we get out of November and get into December. But they are saying that this November is probably the worst November, I think, since 2008. They're saying that this November was the worst November for 17 years, which is pretty incredible. However, overall, holistically, it's been a good year for the market. So people have a very short memory when it comes to the market. So let's get right into the NASDAQ. NASDAQ, similar, same thing. Created a nice little speed zone here with this downside here. So I like this first level. If we can get above this 24,626, and we can push into that 24,849 on the upside. You can see right here, this is the October lows. See the big sell-off right here was all, nothing but sell-offs, and then we held that level right there. Actually, we popped below it on Friday, which was interesting, but now we're hanging above it right now at 24,164.36. So the same thing on the ES. If we lose that level, we're gonna get down to these levels down here at, let me see this one. Yeah, I like that level big. So 23,136, there's really not much down here supporting this. If we lose this low from Friday here of 23,927.25, so be prepared for something like that to potentially happen to this week, not necessarily today. I think we chop around right now. We could very easily push back if we regain these certain levels. The first level, like I said, is 24,626. Then the next level to regain would be the 24,849. Then 25,052, and then this 25,052. We could blow through that really quickly, but this is where you're going to get your resistance at 25,201 if we do get that high. And then, of course, in order for us to continue to push higher, we're going to have to regain these levels up here at this 25,269, and then bust through that previous all-time high at 25,394. But right now, it's chopping around, it's holding. You want to see that hold. You don't want to see it go straight down either. But we've had a nice little pullback. I think it's the NASDAQ's pulled back maybe, I think 2.5, 3, anyway, 2.5 to 3.5%, which isn't bad. But there's definitely room if it still wants to continue to move. So let's get right into Tesla here. Tesla, with everything falling, and I've been looking at things, not horrible. It's really not that horrible of a pullback on Tesla. Now, yeah, we got that nastiness Thursday. I'm glad I wasn't around trading that. That could have been a nasty bloodbath, because I truly have, I'm very bullish on Tesla right now. But you could get stuck. I mean, because I would look at this What day is this? This looks like Thursday morning, right? So Thursday morning, I mean, there's nothing but aggression, no selling whatsoever. And then we get up here and you hit that FOMC high that I've had in place since September 17th. I have not taken this off the chart. And look at how it's still respecting that level. And boom, sayonara, sucker. I mean, it just toasted off of that level there. So that level is going to be a big level for Tesla to get over. I believe that if we can regain that 428.30 level, I think that's going to be a major level for Tesla to continue to push forward. The first level is going to be this all-time high set back in November of 2021 of 414.50. And again, like I was saying on the ES and on the NASDAQ, when you get these sell-offs like this, when you get these sell-offs like this, it creates a speed zone. And, like I was saying before, the streets, you could see there's no buyers here. Sell, 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 sell. So what happens is that if there's people that are taking on new positions of the short side here, they're saying to themselves, if they get over this level right here, because this is a good level where it popped up to, and then you saw came up here and then it shot back down. So I'd say that 408. I'm going to get rid of that 409 level there. I like this 408.16. If we regain this 408.16 level, I think we quickly move into that 414.50 level. And then if we regain that, I think we can push. I'm going to get rid of this. This was a previous POC level. And remove that. Well, then all these shorts right here are going to start scrambling, and it'll be what they consider a short squeeze, and then pushing everything to the high side. Now, that being said, you still have to be prepared for the downside. I do think that my bias coming into today, I would like to see a push to the downside. You can see a little bit of a gap here on the downside. This, we have literally 40 minutes right now. This gap that we see right down here, this could be filled before the market even opens here, down at 390, let's call it 393.88. So this could fill before the market even opens, pull back $6. You have the close for Tesla, which is down here at 391.09. A lot of times Tesla wants to pull back to where it closed. So that could be a big level. So if we do get pullback on the open, when the market opens up here, this would be a good level where you're going to see some reaction. So if we blow through this level hard and then it pops back up here, you could see a rejection for more downside. Or if you see a pullback and you see it responding here positively, this could be a good long entry for the upside. But you have, down here, you've got the 100-day moving average. So we are above that. So that is a good thing. But, I would say considering everything selling off last week, I think Tesla, it held up pretty well. We do still have these open point of control levels that I've had up here. Some of them started to get filled, which I've had. One of them was 394. That was the first one. This is another one that's still open since September 11th. It's 365.90. And then unfortunately, I know we have a couple down here, one at 334.86. That's the last point of control level that I have open. And for those of you that don't know what I'm talking about with the point of control, I leave these levels open until the market comes back and touches these levels. So what I mean by that, and I will show you at 364. Okay, so what happens is these lines are automatic. This is a script that I have, and it's automatically plotted on my screen. So it's basically, it's showing where the heavy volume is at this price level here, and it creates a medium price. So what happens is when the market closes, if price does not come back and touch this level, it then, to me, it's an open point of control level where the market wants to come back and touch that level one more time. So I leave it open. Okay, so there's the ones that are further down. I've got one here at 334.86. So let's go find that one, and I'll show you what I'm talking about there. And so 334. So this is what I'm talking about right down here, 334.86. So the market on this day right here on September 4, 2025, it rallied up, it closed right here and never came back and touched this point of control level. All right, so this level is open as far as I'm concerned down to 334. And as you keep moving day after day, market went up, pulled back, never came back and touched this level. And these levels, they stay. I leave these levels up here, and sometimes it may take 7 to 8 months for them to hit. There was a market, there was a point of control level from January at $416 a share. The market from January of this year sold all the way off down to I think it was like $220 a share, and then not until September did it rally back up and touch that $416 point of control level. So it may take a while, but I leave these point of controls up there for a while. Or when the market starts moving in that direction, I know that that's going to be a level of reaction. So getting into what I think about Tesla today, I do like the resilience of Tesla considering the sell-off that we did have there. I thought Tesla's been holding off pretty strong. My bias coming into today, I would not mind to see a little bit of a sell-off and then to hold Friday's close at 391.09 and then maybe turn higher. So now let's take a look at the strike prices that I'm going to have up here today. Starting up, I'm going to have a little bit of a wide range because it's Monday. However, I'm going to shorten it up because it's a short week. I'm going to have the 420 calls, which expire on Friday. So we're off on Thursday because of Thanksgiving. And then I'm not sure if Friday's going to be a half day or not. So you really have to be careful of things that, people may be traveling. And then so there may not be good volume in there. But I'm going to have the 420 calls. I'm going to have the 385 puts. Which closed at $8.50 on Friday, and the 420 calls, they closed at $2.25 on Friday. So this may open up a little higher as we are $7 higher from the close on Friday, but we'll see in another 40 minutes or so. We'll see where the market opens because it may open up right at the close on Friday, and then that would put this premium pretty close to where it closed on Friday. So let's look at the 5-minute opening range trade before we sign off here. So some beautiful trades, all week long. You would have gotten your trades. I suppose we can go right from Thursday. Thursday, you could have hit this trade on both sides of the spectrum here. So we've got here on Thursday, the range was 414. Call it 414 up to 420. So if you got long on the first break here, you could have gotten about $8 on the upside here. And then later on in the day, if you stuck around for that nastiness at 420 and it broke all the way down here, you could have, probably gotten it down to, another $22 on the downside. So yeah, so your downside play would have been great. But you could see on this 5-minute opening range trade, if you are one of those traders that you want to stick around and trade all day, just watch these levels and you can see when it's breaking through, and you watch the volume down below. If you have some increased volume, then you hop aboard and you go in the direction where it's taking you. So the one thing you got to be careful about is when you have a bias coming into the market, and that's always my biggest anchor and kryptonite when I trade. When I get a bias coming into the market, it's very difficult to shake that. And so as you become a more experienced trader, you just have to come up with sayings in your head to say to yourself, I'm wrong. My bias is wrong today. Step away. Go take a break for 5 minutes. Come back. Because throughout the day, once you develop your trade book and you identify several your A plus trades. I have 3 A plus trades. I literally have 20 to 30 trades I can take throughout the day. But I have my A plus setups that I like to take, and I like to be done with the market and get out of it. Right. So let's look at Friday. Friday, it looked like it was a no-brainer day on Friday as well. You had the opening range trade on Friday of 397 up to 402, another $5 range on the downside. And then you have, let's see, downside here. You've got, you had 398 on the downside, and you had this, come all the way down to 383. So you're making $15, anywhere from $14 to $15 on that downside. That you're making a lot of money on these moves on the options trade. So same thing for today. just make sure that your bias doesn't kill you. Be prepared and know where your lines are here as far as your close on 391.09 on Friday. That's going to be a big level. You'll see some action right there. And then on the upside, you got to watch out for your highs on Friday here. This will be you'll probably get some resistance on the opening range on the high over there. It's 402. So anyways, please like this video, subscribe to the channel, and click on the more button down below and join the Discord, as I will be in there for live trading from 8:15 to 10 o'clock Central Time every morning. Thanks, everybody. Have a great trading day, and I will see everybody tomorrow if I don't see you in the trading room.